Hello, everybody. Good morning. It is August 16th, 2023, 9:20 a.m. We are all alive, breathing, and healthy enough to be here this morning. Good morning, good morning, good morning. It's time to open up some of these markets in about 10 minutes. Big headlines that we have to pay attention to that we'll dive deeper in today. Tesla has done their second round of price cuts in 3 days, particularly in China, which is why the stock was down 1.5% pre-market. I think it's down about 2% right now. Short-term pain for Tesla, long-term gain in the context of basically destroying all of their competition with some of these price cuts. Now, there is a bearish perspective to that, but there's a lot more of a bullish perspective as well. So Tesla stuff we have to talk about. Target earnings were pretty phenomenal. Target basically beat on EPS. They lowered guidance slightly and they slightly missed on revenue, but the stock was up 8% in the pre-markets, primarily because the consumer is strong. $24.8 billion for Target. What is Target in the United States? It is basically a everything store. People go to Target for their groceries, electronics, clothes, whatever it means that people need to get. So $24.8 billion is not bad at Target. And the next big headline today is that U.S. home prices are at an all-time high. This is not good for inflation, primarily because the majority of inflation last month was U.S. rent and housing. So that needs to come down a little bit. And I think supply is going to be the key determining factor if we can increase supply to be able to decrease a little bit more of that inflation from housing. So a lot of things to dive into today. And we're going to get into everything that we got. Joshua, Sam, Roy, Dan, Ernest, Gators, David, Stefan, Tom Brady, Jared, Seth Roth, Bodon, Socom Parade, TJ, KK, Ray, Kim Yoon, Bryant Robinson, David, Dario, Bay Ray, Inbound, Defin, Duke Trillions, Dex. Thank you all for being here. Midwest, it is time to open up the markets. Real quick, a couple of quick announcements. I'm going to do this one announcement at the end of the stream, but I'll do this announcement today as well for the people that are here early. We have a special guest coming on the live stream tomorrow. All right. This is a guest that I've been waiting to come on the live stream for a long time. Mrs. Gunjan Banerjee, a Wall Street Journal reporter and CNBC contributor, has agreed to spend some time with us tomorrow on the market open at 9:45 Eastern. So I do not care what is going on in your life tomorrow. I don't care if your kid is crying. I don't care if you're cranky. I don't care if your boss is giving you a hard time. I don't care if you have a work meeting. You skip every damn thing you have tomorrow to show up to the market open stream. This is the one time I'm asking that you've got to be here because we got to have a good turnout for Gunjan. She is big on CNBC. CNBC gets like a couple 100,000 people watching every morning. Obviously, my live stream is a little bit smaller than that, even though I appreciate the 500 to 600 people that tune in every morning. So it'll be really awesome to have people join and see her. To be honest, I don't know why she's doing this. She found me on Twitter. She was listening to one of my Twitter spaces. And then while she was listening to the Twitter space, I was like, hey, Gunjan, respond to my DM, please. I need you on my morning stream. And then she finally responded and she agreed to be on. So this is totally not worth her time, to be honest. I mean, she's way bigger in regards to finance media. She's been doing this for like 15 years. She's won a ton of awards. So it means a lot to me that she's showing up. And hopefully you guys can join us. And we're going to talk about macro and the markets. So it's going to be super, super exciting to see her come up. All right, let's get into what we've got in the market open. The headline news for today is obviously Tesla. Let me pull up the chart real quick. Are these price cuts something to be worried about? Quite frankly, I don't think so. I think this is very strategic on the side of Tesla because they basically determined that their competition is going to not be able to compete with some of these prices. At the end of the day, a Tesla is better than pretty much every car. We all know this. The question is it expensive enough for the market to be able, or for consumers to be able to handle, especially with interest rates for cars nearing 7 to 8%. I mean, it is the most expensive time in the world to be able to buy a car. You know, I have $3,600 left on my car, and I was thinking next month, why don't I just pay off the $3,600? And then I realized, wait a second, I got an interest rate of like 2 to 3% in 2019 on that car. It would be kind of stupid for me to just throw $3,000 at it when I can probably use that money a little better and just keep making my $311 payment. Because if I bought a new car today, the average is $584 to $650 for a basic car. I mean, we're talking like Honda Civics, Toyota Corollas, because interest rates are through the wazoo. So it is not a good time to buy a car right now. Obviously, a Tesla, you're attracting a high-end consumer market. In China, the competition is brutal. So right now, pre-market $228. Do we see below 200? I think if the S&P, which I think is very possible, has a 10% correction and we get down to 420, which is reasonable. It has happened every August for the past for the past like 10, 15 years that we've had a downturn in August, September, then yeah, Tesla's not going to stay up at 228. It's just not going to happen. A lot of these stocks are going to be able to fall. And so as a result of that, there may be a nice buy the dip opportunity coming up on Tesla, but these price cuts are definitely not helping them. Their margins are going to take a hit, which means earnings are going to take a hit in Q3. That might also lead to worse price action on the stock. But for the long-term shareholders, this is obviously the right move you got to do. You cannot give up demand. You cannot let BYD or Xpeng or NIO get these customers. You've got to get those customers. And still, 16%, 15% margins for an automaker is phenomenal. It's not the 24% that they had, but eventually they'll get back there as interest rates come back down. The banks are still struggling. JP Morgan is down. Bank of America is down. TFC is down on the threats of TFC is actually flat, a little bit up in the pre-markets, on the threat of the downgrades from Moody. So we talked about it last night on Finance Junkies. These downgrades are ridiculous. They mean nothing. There's nothing wrong with the long-term stability of banks outside of a black swan event happening. Where was Moody's, as Chris said yesterday, when Silicon Valley Bank was collapsing, when FRC was collapsing, but they want to get mad at JP Morgan Chase and Bank of America because the U.S. is in a lot of debt. I mean, like, that you can argue that that's a reason to downgrade them, but the timing of the downgrade is pretty bad. Yeah, I do want to correct myself on something I said yesterday. Yesterday, I said, I don't know why the health of the economy leads to a downgrade of the banks. There was a good comment on my live stream yesterday that corrected me, and so this is a really good correction. U.S. banks are the largest owners of U.S. treasuries. So if the United States debt is in a bad place, and obviously $32 trillion in debt, and the potential of a default on debt, which I don't think is going to happen, but let's say it does, then all of our banks collapse, right? Because US banks own the most amount of treasuries from the United States. So obviously it is very bad for the US economy to be in this much debt for the banks. However, the counter thesis is that US debt doesn't really matter as much as Moody's thinks it does, because there's just not that many other reserve currencies for the world outside of the US dollar. So as a result of that, I don't think this is going to be the biggest deal in the world. And hopefully as interest rates come down, things are going to get to a much better situation. But we will see what happens from there. Ty Gordon says, don't underestimate the legitimacy independent media lends to these mainstream talking heads. They need you, not the other way around. Yeah, I mean, that's one reason why she might be coming on the stream. Obviously, her seeing I have a little bit of an audience probably attracted her to come onto the stream. And as a contributor, she needs to continuously be reaching new audiences. So look, that may be a reason she's trying to attract a different demographic. And so hopefully we get a lot more of these people that come on the stream, which is going to be super fun. DRK, good morning. Thank you for being here. Amit doesn't understand Tesla, even though he's listened to man experts. No, Blake, you're just too fucking bullish on Tesla, which is why at 290, I was not buying, even though you said it was undervalued. No. I understand Tesla. I get the argument. I've listened to too many fucking people talk about Tesla. However, when your margins are coming down and your earnings are not going to be that good in the short term, the fucking stock is going to go down. You don't have to be that much of a Tesla fanboy to understand that that's going to happen. Long term, I think the price cuts are a brilliant strategy. But in the short term, it's going to drop. The markets, this is what's going to happen in a competitive economy, especially with interest rates continuing to remain where they are. I said same thing about Palantir at $20. It's not going to be able to stay there. It's not going to be able to sustain that valuation. This is just basic stuff. I'm not the biggest expert on valuations, but I can obviously tell if you have to cut your prices, your earnings are not going to be that great. It is what it is. Long term, though, I don't think that's going to be a major issue for Tesla because obviously they're playing the long game. SoFi at $8.24. They are down 1.61%. Meta is down 0.61%. Snowflake down a little bit. DNA, Ginkgo Bioworks, Kathy Wood bought another, I think 234,000 shares yesterday on this one. So she is absolutely loading the dip on this one as it comes down. Amazon down a little bit from 142 yesterday, and Google at $130. Google continuing to keep their earnings gains. Not too bad. Josh says Blake doesn't understand that Tesla will drop. Tesla has a rough 12 months ahead. Elon said it himself. Yeah, I mean, look, I'm very bullish Tesla, but the stock is in a tough situation right now. And now at $100, the stock was not in a tough situation. Was I buying? No. Am I stupid for that? 100%. You can call me stupid for that. But to say to criticize someone for saying, look, the stock's going to have some trouble over the next couple months at this price, I mean, I don't know. That's just not looking at valuations at all, or just not looking at short-term problems that Tesla has. All right, here we go. In 2 seconds, the market will be open. It is August 16th, 9:30 a.m. We are all alive, and we are ready to see the stock market and what it does today. Wake your ass up. The stock market is open. Tesla down 2% on the day, 228. We'll see if the dip gets bought or if it continues to decline. Bank of America is down. TFC is down. S&P 500 at 4. $4.42. We are $3 away, $2 away from seeing 430s on the S&P 500, which, look, if we got to take the Band-Aid off, let's take the Band-Aid off. Let's get to 420 by the end of August, September, and let's move on from that. But it looks like we are headed a little bit down on the S&P. NVIDIA at 444. All the price targets for NVIDIA are still at 500. Two new price targets came out today by a couple of different banks for 500 and 550. Earnings demand on August 23rd is going to be very interesting. The base case people have is 376. Bull case is 630 on NVIDIA. Home Depot is up 332. Dutch Bros $32. Apple 177. JP Morgan Chase is down. PacWest is down. Zion is down. The regionals are not getting any love this morning. Key Group is down. Palantir $15.28. Palantir down 0.7% to start the market. Enphase 132. Let's see if we can get Enphase below 130. I don't think we've touched 129 yet, or we did, but it was very slight. So let's see if we can get there. Robinhood at $10.36. One of the bear cases for Robinhood over the next couple months is if August and September suck in terms of the markets, Robinhood is going to have declining transaction revenues, and that might hurt their GAAP profitability going into next quarter. So this next quarter might suck for Robinhood, but again, I don't know what the bottom is. $7, $8, $9. If we get back to those levels, it's just going to be a screaming buy, in my opinion, even if the market's in a tough situation. So Robinhood holding up at $10.33. PayPal below $60. This one fell 6% yesterday. The market has essentially not given any credit to the CEO. One interesting thing I learned yesterday about PayPal is they have $2 billion left in 2023 to do share buybacks. And that would be taking up about 5% of the float that's left. That's pretty bullish if you're PayPal. So they've got to spend that $2 billion eventually. You would argue they should be spending it right now, unless, maybe they're waiting for $50, $52. But PayPal, that is one thing that is bullish. And, I put up a tweet yesterday about PayPal. The majority of FinTwit seems bearish. Everyone's saying, oh, people are bullish on FinTwit. That's why we should go against it. I think the majority of people actually think PayPal is dead. And that's actually a good catalyst for PayPal. Coinbase got approved today for future contracts on crypto. There's some more soft, dovish legislation that is coming down on crypto, which is great for Coinbase, which is why we see the 4% pop right now on Coinbase. Bitcoin at $29,000. SoFi $8.32. Duolingo at $130. QQQ at 365. Well, we're below 370 on QQQ. Microsoft at 319. Look at that. Microsoft's at 370 at one point this year. So Microsoft is down decently over the past couple of weeks. Netflix at 422. Pinterest at 25, and AMD also down from 119 on that earnings pop, now at $109. We got a red market, folks. Not the worst red market, but it definitely is a red market today. I want 165 Tesla. Yeah, I think we would all love 165 Tesla. Is that going to happen? I don't know. That's going to be hard to see if we get to 165. Now, 165 would have to be things dramatically kind of suck in the context of the entire market. But I think 200, 180, that is definitely possible in the context of Tesla. More red. Zocold is saying more red. Look, I think we're going to get more red. Let's take a look at Tom Lee. He was on CNBC today. Let's get his thoughts. Again, his overall thoughts have been choppy August and September. Inflation is coming down, though, and eventually we should be able to get all-time highs on the S&P 500 going into the new year. So let's hear some of his thoughts today.
So under 2%. It's going to happen for the week after you made that call, weekly call, which you're not going to do anymore. Maybe not, but that's kind of playing out as well.
That's right. It's August is generally a tricky month historically, especially when the markets are strong through July. It does seem like the weakness is a lot more pronounced, especially because yields are up and the dollar's strong, and I think people are maybe fretting a bit about China too. So I think later this month, starting with the FOMC minutes, and then we get Jackson Hole, and then at the end of the month we get the inflation data, the PCE. Maybe that's when markets start to feel better. So maybe we could finish August a little better than we started. But you're right, maybe it could be deeper.
Your call was based on the trend in inflation, which continued in the week that you made the call. It was based on the inflation numbers that were coming that week, which were friendly. They were soft. And but the economy, meantime, has been much stronger than most people thought. And now it's going to be no landing or soft landing, or people are thinking the narrative changed. But you still feel that inflation is going to show a downward trend. In the PCE, what'd you say, 0.2%?
Yeah, that's right. I think core inflation which came in at 0.16 last month. That's still reflecting an elevated housing number. Shelters running at close to 8%. That's going to start to cool, and there's a lot more downside in used car prices. And then core services, which is the rest of that piece, it's actually been cooling because that was kind of been pushed up by vehicle insurance and auto repair, which are going to start to fade. So I think inflation is on a glide path towards sub 3, sub 2.
So this is really interesting. Overall, it's up 3.2%. In July, food was up 5%. Energy was down 12%. Used vehicles are coming down dramatically at 5%. Shelter is up 7%. So Tom Lee's under the same assumption that most people think, which is that once shelter cools down, hopefully over the next couple of months, we are going to see that two-handle on inflation. And when we see that two-handle on inflation mixed with some of this deflationary stuff coming out of China, there may be a chance to get rate cuts quicker than the market expects.
By the middle of next year, that's why I think.
Sub 2?
I think we could print something pretty low because when shelter goes to 0, then you could have core at 0. I mean, you could have some 0 month over month, or even negative month over month for a bit.
It's weird.
That's like a shocker.
We back out energy.
Yes, that's right.
That helps because energy is, but then it filters through to other things where it does seem to can be reflected even though you back it out. Right?
That's right, because the diesel filters through as a surcharge. I think the Fed will be alarmed a little bit by energy, but they will treat that differently than something sticky, because energy can sometimes be idiosyncratic. The rises and falls.
So under 2%. So the highs by the end of the year still in your playbook?
Yes.
All-time highs in the S&P by the end of the year.
Yes, I think as bad as August is, maybe even if we're down 5-8% in August, there's $5.5 trillion of cash on the sidelines. I do think a lot of people still think the Fed is going to hike, but if they do only one more, I think the market can absorb that. And then, of course, growth has been strengthening. And look at S&P earnings, ex energy, it was up almost 3% in the quarter, the first time in 6 quarters. So I think you have an earnings recovery, Fed maybe slowing, interest rates could stabilize, and then the cash gets put to work.
Can we do all this with China falling out of bed?
I mean, we do have to watch that carefully because on the one hand, China's weakness exports deflation, which is kind of gives us 2024 the idea that producer price indices and CPI could be.
By the way, China exports to the United States are down 24% in the month of July. So when he's talking about China exports being down, the data supports it. The United States is looking to other places like India, even though it's not as big as China. We're looking for diversification given what happened during the pandemic. So that is another bad thing for China. The majority of their economy is exports. If they're not exporting to the United States, if we're not buying their shit, it's not the best for China.
Softer,
Right.
But you don't want the second largest economy to fall into a recession or a depression or a recession.
How does this inflation call of yours and economic growth call is it either influence or impact your call on crypto?
It has.
I feel that they're all very interrelated for you personally.
Yes, because crypto is dependent on monetary policy.
Right.
Right. So if inflation is cooling, then we can start to bet on forward financial conditions easing and central bank easing sooner. That's bullish for crypto or
right.
alternative assets. Yeah.
Okay. So, but what I'm trying to understand is which view did you back into? Do you understand where I'm going with this?
I mean, I think crypto is the residual. Is the residual allocation based on what the central bank could do? And of course, Bitcoin separately has as catalyst if an ETF, which we're in the window where we'll start to see the potential for an SEC approval of a spot Bitcoin ETF.
I think Tom Lee's absolutely correct on that. Bitcoin has catalyst when it comes to the ETF. They have catalyst with the halving event. And also, absolutely, crypto will move when inflation comes down and interest rates come down. Everyone says crypto acts, in an antithetical way to U.S. monetary policy. No, crypto is a growth stock. Bitcoin is a growth stock. That's it. And growth stocks need low interest rates to survive. It's not the inflation hedge people think it is. Maybe in the future, if we have 50 trillion of debt, it is. But we need, growth stocks to come back, and then crypto is going to come back as well. So I think Tom Lee's absolutely correct on his analysis there. Now, one of the things he said that was really interesting is that we have $5.5 trillion in money market funds. Put in the chat if you know what a money market fund actually is, and don't lie. Because I've heard the word over the past couple of months but I did not know what it meant. So today I finally researched it. This is the journey of you guys seeing me live, actually try to learn more about finance and the investing world. I knew I had a general idea of what they were, but I didn't know exactly what they were. I knew they were a place where you could reserve money and have a low risk return. 5.5 trillion is it increased by 14 billion in the week of August 10th, so last week, and now 5.5 trillion is on the side. So what is a money market fund? Essentially, a money market fund is a type of mutual fund that invests in high quality short-term debt instruments, cash and cash equivalents. It's not as safe as cash, but it's also not getting eaten away by inflation. It's in some type of investment vehicle, which is extremely low risk to get some type of return, even if that return is like 0.5%, 1%, less than 0.5%, whatever it is, at least it's not sitting in cash. All of that money that's on the sidelines eventually is going to want to come either to T-bills, where you're getting 5% over 2 years, 4.9% now, which is the highest since 2008, or into stocks. And I think the catalyst for some of that 5.5 trillion injecting itself into the economy is going to be 420 on the S&P. If we actually get a 10% correction, I think there is going to be some people that are saying, what the hell am I doing? I need to scoop up some of these stocks because now they are cheap with the assumption that inflation is coming down. If that's the case, hopefully some of that money makes its way into the market. If that doesn't happen, then we're going to have that money still sitting on the sidelines. But as of now, that money currently is on the sidelines, and hopefully it comes up a little bit more. Crossroads says he knows. Broccoli says I don't. It's where my money should be instead of stocks right now. Again, look, if your stocks are down, which all of our stocks are down, I wouldn't stress it too much because outside of a black swan event, this is normal in September, October. Remember, unless you're a professional money manager, you can't time the market as much as you think you can, right? So you might see some people who are like, "Oh, I'm all cash right now," because they sold out of a ton of shit in July, and you might think they look like a genius, which theoretically they could be, but that also meant they're timing the market, and that's not a bad thing. It's just if you don't want the instability of peace of mind to time the market, then you're not going to be able to get out and get into the market like some of these professional money managers. So that means you have to deal with some volatility. That's just the name of the game. That's how it goes. And hopefully August and September is the most of the volatility, and eventually when inflation comes down by October, November, we see a little bit of a rally. Now anything can change. We can have some different black swan catalysts, but if that doesn't happen, hopefully things are going to be good towards the end of the year. I'm kind of on the side of Tom Lee, given the data is supporting it. And so we'll see where it goes from there. I don't think this is Tom Lee back in 2022 when he was perma bullish and said inflation was coming down. He was right. The problem was inflation was at 10% and it wasn't coming down fast enough. Now we're at 3.2, 3.3. We get down to that 2%. It's going to get fun. It's just a question of if we can get there. SoFi at 835, Meta at 299. Let's check on Target. Again, Target had phenomenal earnings this morning. Look at that. Target's up 5% on the day. Target was facing some political backlash over the past few months. If we look at the year to date, it was at 177. It came down to 157. I believe in May, this is when you have the political stuff from 157 to 124. So they had to deal with their Bud Light moment, but they're slowly making their way back as they show good earnings and eventually get into good graces with the consumer. It seems like the politics didn't stop people from shopping at Target, even though the politics was definitely not the best for Target. But is this CNBC lady into Palantir? I'm not going to ask her about individual stocks because I don't want to. For those that don't know, Gunjan Banerjee will be joining the live stream tomorrow. She's a CNBC contributor, Wall Street Journal. I just want to talk to her about macro. I don't want to put her on the spot and make her feel uncomfortable talking about specific stocks. So we will be just discussing macro. Now, granted, she tuned into a Spaces I had on Palantir on Twitter, which is why I even got her attention. So I'm assuming she's interested in Palantir. I don't think she will probably give a public opinion on them. But she definitely is interested because she joined that space. All right, let's take another look at an update on regional banks and what's going on right now. I watched a lot of content yesterday trying to understand regional banks. I think they're in a good situation. It seems like the hedge funds are buying the fuck out of them. But let's see kind of where the market is ultimately going to take them.
Talk about the pressures on the banking sector. Jason Goldberg, Barclays Managing Director and Senior Equity Analyst. Good morning.
Morning.
So there was a sort of a regional bank freakout, I would call it, in the aftermath of what we saw with SVB. Then we had a lot of folks come on here, talk about office, how the office business was going to kill regional banks. Then we had somebody who we had on just this week who said, actually, it's the multifamily that's going to kill the regional banks. And now Kashkari is going to kill the regional banks and Fitch. Which is it?
We don't
Or
think,
any of them?
Yeah, we don't think any more of the larger regional banks had it fail this year. That's for sure. Clearly they're facing pressures amid an aggressive Fed tightening, pressuring net interest income. Loan losses are rising, but at a very moderate clip. And now more recently, we're facing increased regulation and capital requirements, and this week debt requirements were the talk. So clearly there's pressures, but we think the group can manage through it.
So when you see Fitch say this, what's the takeaway? Is there a takeaway?
No, I mean, I think clearly Fitch is acknowledging it's a challenging backdrop. I think a lot of the stuff we knew to start the year, the Silicon Valley debacle kind of added some of the pressures and maybe exacerbated some of the deposit pressures these banks were facing. But I think, again, it's all manageable in the context of their current earnings and capital capacity.
You said this year there won't be any failures this year. Does that mean because you have a fear that somehow there will be failures next year?
No, my crystal ball is only so powerful. But no, I mean, I think, we focus on the banks $100 billion in assets and above. And with that lot, I think just given their earnings capacity, they can handle a lot of these pressures that are thrown at them.
He's correct on that. I mean, look, Silicon Valley Bank and FRC were in very unique environments. People forget Silicon Valley Bank, they were managing money for startups and they were being super risky with that money. That's why they failed, because they didn't effectively risk manage with interest rates rising. Same thing with FRC. They were managing a lot of money for rich people. They didn't really effectively manage when it came to interest rates rising. A lot of these other regional banks that are getting punished, they didn't do anything wrong. And yes, the cost of capital is increasing, which means the cost of increasing deposits is also going up, which is a net bad thing for their business, but they're not being irresponsible. TFC, Key, Zion, they're not being Silicon Valley Bank level irresponsible. So interest rates going up doesn't help them. It hurts them, but it's not to the point where you would imagine they fail. And so I think that's one of the key differentiators, which might make regional banks really attractive if we see some more volatility in them.
Of the regional banks that you cover, which would you like, and are there banks that you would not touch in this environment?
I think if you look at current valuations, the group's trading at less than half the S&P 500. Historically, it's closer to 3/4. So while there are kind of a lot of headwinds we talked about, we think the market's more than discounting them. So if you think about some of the regional banks like a PNC, a U.S. Bank, a Fifth Third, and we think they're well positioned to handle the current backdrop.
Is there any that you think are not
I mean,
worthy of your time or more resources?
Yeah, I mean, if you look at some of the banks that maybe have like outsized exposure to commercial real estate, like the Zions or Comerica, something maybe more cognizant of, given that's where we think we'll see the most acute loan losses in the near term.
You just mentioned real estate broadly. Do you break it down between office and multifamily? Which do you think is more dangerous?
I think at the moment, office, clearly, just given the drop in property values, the work from home secular trend that's kind of exacerbated by the pandemic, and the backup in interest rates, you're seeing a lot of pressure there.
You don't think that the multifamily, I mean, just the amount of money that went into multifamily post-pandemic at the both height in terms of prices and in terms of low in terms of where rates were?
It's certainly something to keep an eye on. I think it varies from market to market. Some markets are more older built than others. Some markets have more housing pressures than others, which play a role as well.
The big takeaway there is commercial real estate. You don't want to be investing money in banks that have outsized exposure to commercial real estate, and some of the regionals do. But if you avoid those, I just don't think the regionals are in that tough of a situation. A couple of updates on institutional ownership of Palantir. Keywise Capital Management disclosed a $19.5 million stake in Palantir. They had 0 shares before June 30th. As of today, they now own 1.2 million shares. And Scout Investments has disclosed a $185 million stake in Palantir, 12 million shares. Scout manages in capital. So this was a big one I saw today on the 13F, 13G filings. Again, this is of June 30th. These could have been sold since June 30th, but one would argue if you buy 12 million shares, 185 million bucks, you're probably in it for a little bit longer than a couple of months. They had 0 shares before this as well. So we're seeing some institutional ownership continue to increase in the context of Palantir. SoFi dip seems to be getting bought up this morning, at least for a little bit. Again, SoFi has been in such a unique situation, being stuck in this like 830 to 850 range. As you can see right now, 839. It was at 1170. That was the peak on earnings day, and it has come down. Remember, every price target upgrade on SoFi has happened post earnings. I mean, I have not seen a single downgrade. Even the dude who said it should be $2.50 upgraded them to $3. And so I think it's obvious a lot of institutions want this stock and they're not going to give it the premium right now. And quite frankly, it's a growth stock. They're not profitable. You can't give them a $16 premium, even though, that's the price target a lot of banks have on them, especially when it's up more than 100% year to date. So yeah, I think I think this is a reasonable price for SoFi to be at. Now at 7, it would get stupid. And I think that is when you really want to consider buying. At 840, I think it's reasonable to DCA. And I even think at 840, it just consolidating at this point for the next couple of months, that's totally fine, because that gets you out of the $4 or $5 penny stock type of range. I mean, remember, there were thoughts about a reverse split on SoFi a couple of months ago. And so now that hopefully that's gone out of the question and institutions can buy it because it's not sub 5, that's also really good in the context of SoFi. Enphase dip getting bought up a little bit at $135. Robinhood flat on the day, not down anymore. PayPal at 59. Dip getting slightly bought up, but still below $60. Coinbase, big winner today, up 4% on the day. Disney is down $86.90. So their earnings pop from 90 has come down. Amazon down a little bit at 136. Google's been flat at 130 for almost 2 weeks now, which is pretty amazing. So the market really does not want to give up the Google premium that they gave them post earnings. I also saw a chart today. Google has returned 4,700% since its IPO. Amazon has returned 6,700% since its IPO. So Amazon was the better bet over Google if you invested in it back in 1995 is when they went public. Around the time, Microsoft also up a little bit on the day at $322. Pouncer, Enphase, Tesla all recovering into the green. That is correct. SoFi needs to be above $10 for another major institution to buy. Yeah, I agree. I mean, getting over 10 would be helpful, but I do think there are a bunch of people loading up, or a bunch of banks loading up. We saw Morgan Stanley increase their stake by 86%. Now, they represent a bunch of clients that bought it, not necessarily Morgan Stanley themselves bought it, but we did see a lot more institutional exposure coming up on to SoFi. The other thing about SoFi that people are forgetting, September is when student loan refinancing is going to happen. And when student loan refinancing happens, there's $1.6 trillion in debt. SoFi did $300 million of student loans last quarter. This quarter ends in September. So the doctors, the lawyers, the people that took out hundreds of thousands of dollars for their student loans, which are the main clients of SoFi, they're going to take up they're going to look into refinancing over the next 2 months, and then October, November, December, a lot of that's going to happen. We can see a major catalyst in the context of refinancing for student loans. Maybe 300 million goes to 500, 600 million in student loans, and that's going to be big for SoFi. And so I think that's another catalyst that people aren't thinking about. I know student loans are baked in, but we haven't seen the raw numbers of how much student loans are actually going up. And as a result of that, the more that increases, the better chance we have for SoFi to see some outsized returns in the context of their student loan portfolio, which is going to be a good thing. Ultimately, that's what we need for SoFi. Amit, any thoughts on AI on UiPath? I like UiPath as an AI play. I wouldn't really pick it over Palantir and some of the other ones that are there. It's interesting. I know Kathy likes it a lot. I haven't done enough due diligence to go long on them or to be excited, but from my basic understandings, they're not the most interesting company in the world. So, they are who they are. But robotic processing automation, RPA, is very interesting. It's just not that exciting at the end. Like compared to like AIP or ontology, it's not the thing that I really want to care about too much. What's your buy price for SoFi? Below 8 would be more exciting to me right now. I'm also strapped on cash. If I had a lot more cash right now, I'd be buying a little bit more, but below 8, that gets a little bit more exciting for me. Someone here also asked another question right here. Where is it? People wouldn't buy UiPath if Kathy Wood didn't. Maybe. She definitely bought a lot of exposure to it. Oh, this one. Amit, what did you study in college and why? I studied business management, which I guess is a degree. It was some, in college, I was mainly doing my own things. I started my own tutoring company, and I actually was able to scale that to 6 figures in over the course of 4 years. So a lot of my attention went to managing my own clients and my consulting firm. I was driving a crap ton of hours every single week by the time I got to my senior year. So my attention in college was primarily focused on what outsized risks can I take. I failed at a bunch of businesses in college, just like trying little shit here and there. So school wasn't the biggest importance for me. But I did go to my classes. I did pass all of them, and I did end up taking a degree that I think really was meaningless, but it helped me get the degree. So if all else fails, if I need a degree to go into the workplace, I have a degree. But I do not think that degree was I've learned more being a finance YouTuber than I learned from 4 years of business school, because it's just, I didn't even know what a stock was in business school. Like they really don't teach you. They were teaching us dumb shit, bro. They were not teaching us the stuff that actually matters. So it is what it is, but that's what I studied at business school. Palantir at $15.29, down 0.52% for the day. Again, Enphase is up, Robinhood is down, and SoFi is down for today, just a little bit at 837. All right, we got a red day, folks. We're going to see what happens, but we got a red day. Not as red as it was a couple of days ago, but the red is continuing to happen. Where did you go to school? I went to Rutgers, New Brunswick, and I loved Rutgers. My time at Rutgers, I mean, bro, I have so much nostalgia. I live 40 minutes away from Rutgers now because we recently moved. I loved Rutgers campus, the university, the social life. I mean, my senior year from September to February or to March before the pandemic happened and everyone went home. Those 6 months, my senior year was like, I feel like I lived 4 years in those 6 months. I really enjoyed my senior year. So I had a blast. I had a great time. Made a lot of memories, but school itself, you know, I skated by because business school is just not that complicated at the end of the day. Wasn't that hard. You went to the wrong college, bro. Honestly, Rutgers was the only college I got into. I got rejected from every Ivy. People don't know this. I got waitlisted at Harvard and Princeton. And for those that don't know what waitlisted it is, that means they like kind of like you, but they don't like you yet. And so they rejected me 5 months later instead of rejecting me immediately. If I had went to Harvard, I think my life would have changed for the worse, because the reason I'm in the situation I am today, the reason I've been able to build a little bit of a community on YouTube, the reason I have a startup, the reason I've been able to raise funding for my startup, all that stuff, it comes from the fucking pure hustle and grit that I learned going to a state school at Rutgers. I mean, I built a business that did 6 figures in revenue throughout the 4 years of college. And that was because of fucking hustling and being gritty. Like at the end of the day, that's just what it was. If I had gone to an Ivy League school with that Harvard security behind me, I would probably be some fucking consultant wearing a Patagonia vest at Deloitte right now, like making a PowerPoint, which is what they do. I watched the day in the life of a consultant video over the weekend on YouTube. They make fucking PowerPoints. That's what they do. That the guy admitted. He works in London at some KPMG. He was like, bro, we make PowerPoints all day. And I would be presenting it to a client waiting for my midday coffee at 12 p.m. Like that life is just, no, I do not want that life. I am very happy with the life I have right now, although it's challenging and I'm not making as much money as those consultants. I'm fucking building, bro. I'm building. I just love the process of building. Like even a YouTube channel, a Twitter following, a startup, it's fucking building, not making presentations to present to some stupid client that doesn't give a fuck about your presentations. And so that's what would have happened if I went to Harvard. But that didn't happen. I am here. So it's much more fun to be here. What was I going to share? Oh yeah, let me share. I have 2 more things to share and then we're done for the day. Number 1 is a word of the day. Let's share that right here. Word of the day is abscond.
Abscond.
To depart in a sudden and secret manner. So my gains that were up in the tens of thousands, the many tens of thousands on July 31st have been abscond from my Robinhood portfolio. It was a sudden departure of my fucking gains, but it's okay because hopefully they'll be back. Hopefully one day they will be back. And then final thing I got to share for those that just joined the stream tomorrow. I don't care who you are. I don't care where you're from. I don't care what you've got to do. I don't care if you got to take a day off from work. I don't care if you got to put a pacifier in the kids so that they don't annoy you. You have got to be here tomorrow. We have Miss Gunjan Banerjee, Wall Street Journal reporter and CNBC contributor, amazing business reporter who will be here at 9:45 a.m. Eastern to talk about macro and markets. This is a big deal for the live stream, okay? This is a little bit more legitimacy to the live stream, having a guest like this. Obviously, I love all the guests we've had on the live stream, but having someone who's recognized by the mainstream media, it's pretty cool, okay? As much as we shit on the mainstream media, it's pretty cool, and I actually really like Gunjan's takes, and her reporting is amazing. Having her come on the live stream is going to be super awesome. So we need to have a big turnout for Ms. Gunjan. Show her a good time. She's going to be with us for 5-7 minutes just discussing her thoughts on the macro, and it's going to be super fun. It's going to be super exciting. So make sure you are here no matter what. If you are not here, I will abscond you in some way. There will be a sudden departure of your life somehow, and you won't know how it happened, but it happened. The chat is going to scare away. Yeah, you guys have to be on your best behavior on the chat as well. No jokes tomorrow, bro. This is a serious thing. No jokes. Obviously, I'm very excited for it. So going to be excited to have her there, and that's going to it's going to be fun. Okay, that's it. Pretty name. Yeah, she definitely has a pretty name as well. Okay, that's it for me. That's it for the live stream. Thank you all for joining. Again, no big news today outside of the fact that Coinbase got futures approved. U.S. housing prices hit an all-time high. Inflation should be coming down when those rents cheer up. Tesla recovering some of its gains, $233, and Target up 6% on the day with high U.S. retail sales. So that's it. All right. Thank you, everybody. We'll be back on Finance Junkies tonight to talk more about. Oh, we have a special guest on Finance Junkies on Dredge. He's big on Twitter if you guys know him. So he'll be here today. And that's pretty much it. I've got a Palantir video coming out responding to a bearish analyst in about an hour. So you'll be able to check that out. And then we'll be going from there. I will delete anyone that is disrespectful. That is correct. Mods, high duty tomorrow. Any stupid, disrespectful comments, got to make sure we moderate it. We got to make sure this is going to be a fun stream, and hopefully she enjoys it. And also, this is a good thing because we will be able to get more guests in the future joining the stream if we have, good experiences with the guests we're getting on right now. So it's going to be fun. It's going to be super, super, super fun. Any thoughts on sound? I've seen them. They're in the AI space for audio. Looking deeper into them. Don't have any thoughts yet, but I have heard of them. Just no thoughts. Yes, a lot of other people have been messaging me about it, so I will be looking into it. All right, that's it for me. Thank you, everybody. I'll see you tomorrow. Make sure you are here tomorrow. Tomorrow's the day. Tomorrow is the day. Thank you, everybody. See you tomorrow. Good night or good morning, whatever. Bye.